Today, we're diving into a fascinating story about Kao, the Japanese giant famous for things like soap and diapers. We're going to look at how they're basically tearing up their old playbook and betting their entire future on things like high-tech agricultural drones and cutting-edge skincare. It is a really bold move, so let's see if it's actually working. So what's the big picture here? Well, it's this fundamental shift away from being a company that wins on just sheer volume to one that wins because its technology is absolutely indispensable. And look, this isn't just some minor tweak to the business model. This is a total reinvention. Let's find out if the bet is paying off.
Okay, here's how we're going to break it all down. First, we'll look at the crossroads Cassell found itself at, then the massive market headwinds that really forced their hand. After that, we'll get into their new strategy, see how they're putting it into action, and then, the important part, we'll look at the numbers and see if it's all adding up.
Right, so for decades, Kao was a household name, a real titan of industry. Their formula was simple, but man, it was powerful. Make a ton of stuff and sell it to everybody. Just think mass production, global scale. But that foundation, the very thing that made them successful, it's now cracking under the pressure of some really powerful market forces. The regions that were supposed to be their big growth engines started sputtering, and that forced a complete rethink of who they even were as a company. So where exactly are these headwinds coming from? Let's take a closer look, especially at those crucial emerging markets that were supposed to power Kakao's future. As you can see, Asia is a massive piece of Kao's business. It's not just another market for them. Its performance is absolutely critical to the company's overall health. And well, this is where those cracks first really started to show. In China, Kao basically ran into a perfect storm. You had a slowing economy, you had fierce local competitors popping up, and the whole retail landscape was shifting overnight to platforms like TikTok. The old model of just shipping more boxes, well, it just wasn't going to cut it anymore. This whole situation forced a critical question, and it led to a really bold new answer, the K27 strategic plan. And I gotta tell you, this was not just a minor course correction. It was a fundamental reinvention of the company from the ground up. So this is the crucial question, right? How does a company this big, with this much history, pivot away from the very model that made it successful for decades? Honestly, it's like trying to rebuild your ship in the middle of a raging storm. And their answer is what they call the global sharp top strategy. So instead of fighting to be number one in market share, they're aiming to be the only solution for specific, high-stakes problems that nobody else can solve. They don't want to be the biggest. They want to be the one you literally cannot replace. And this whole strategy is built on 4 key pillars. It's not just about dreaming up new products. It's about totally transforming how they invest their capital, how they develop their people, and how they team up with partners to create entirely new ways of doing business. Okay, so that's the high-level strategy. Now let's see how it actually translates into concrete action. What does this pivot actually look like on the ground? In China, this meant a dramatic, almost surgical shift. They actually shut down their own diaper manufacturing, can you believe it? Freeing up capital and just abandoning that low-margin volume game. Instead, they got laser-focused on just 6 high-margin brands and started exploring totally new business-to-business opportunities. And here is a perfect example of this pivot in action. They took their core chemical technology, something deep in their corporate DNA, and created this high-tech additive for agricultural drones. This solved a huge efficiency problem for Chinese farmers, and just like that, they created a completely new high-value market pretty much out of thin air. And we see a really similar story over in Brazil. They totally abandoned that old, slow, do-it-yourself mindset. Instead of trying to build everything from scratch, they partnered with a local expert, Mitsui & Company, to instantly tap into an existing distribution network. It let them test the market smartly with a single hero product before going all in. So this new strategy, it sounds great in theory, right? But is it actually working? Let's get to the good stuff. Let's look at the numbers. The financial data from 2024, it tells a really clear and compelling story. First up, let's look at return on invested capital, or ROIC. You can think of it like a report card for how efficiently a company uses its money to make profits. And what we see here is just a massive jump. It more than doubled in just 1 year, skyrocketing from a pretty sluggish 4.1% to a very, very healthy 9.2%. Now, what's really fascinating here is where that improvement came from. If you look at the middle 2 numbers,
asset turnover and equity multiplier, they stayed flat. That means they didn't just sell more stuff and they didn't take on more debt. The entire gain was driven by a dramatic improvement in their net profit margin. To put it simply, they are making much more money on every single thing they sell. And here is the ultimate measure of success: economic value added. Now, that's a fancy way of saying that after you account for the cost of all the capital they used to run the business, Cal created over 33 billion yen in new economic value in 2024. That's a huge turnaround from basically destroying value to creating it. So what does the future hold as Kao continues down this new path? Because this isn't just a one-year fix, right? This is a whole new identity for the company. This whole transformation carves out a really unique space for them in the competitive landscape. They're blending world-class ESG leadership with a deep, science-based approach in both consumer and chemical markets. And that creates a niche that giants like P&G or BASF, they just can't easily replicate it. Now, the road ahead isn't without its challenges, for sure. The Chinese market is still a risk, and new regulations are going to add costs. But the opportunities to apply their unique tech in unexpected ways, creating materials to make roads last longer, those are immense. The expert consensus on this is clear. This strategic sacrifice of, low-quality revenue for high-quality profit, it isn't just a plan on paper anymore. The results are in, and it is working. It's successfully repositioning Kao as a tech-focused, high-margin enterprise. Kao's transformation from a sleepy consumer goods giant into a science-driven powerhouse, it offers a powerful blueprint for any business that's navigating change. And if you need deeper insights like this, you can always reach out to us at HDIN Research. This whole thing leaves us with a final question. In an era of constant disruption, is any company truly safe if it's not willing to make a similar radical pivot to secure its future?